Over to markets now, and last week's acreage report from the USDA showed estimates of almost 93 million acres of corn, which is about 2% higher than in 2020. For cattle producers, a large corn crop and potentially lower feed costs would be welcomed, though that is still far from certain at this point. Oklahoma State University livestock economist Derrell Peel joined me this week to talk about that and other things making news in the cattle markets.
Well, I think the message here is, we've seen a dramatic increase in grain prices, and I think the message out of this report and going forward is that we're going to continue to experience, relatively high grain prices. I think we're just going to have to contend with that. I don't think we're going to fix it with this next harvest. Obviously, we've still got weather issues that we're watching and so on, but with a good harvest, we probably still have elevated grain prices. If we have weather problems, it could get even more severe.
Yeah, Derrell, and speaking of weather, that's top of mind for lots of folks. Drought still an issue for producers, but also flooding in some spots. How does all of this affect the livestock markets?
The flooding issues probably have less impact on cattle markets. They could have some impact if it's delaying, for example, hay production in some areas. We've had a lot of rain in some parts of Oklahoma, for example, and I know other regions as well that have delayed, some hay harvest in terms of both quantity and very likely in terms of quality. So some of those things could be an issue. I don't think they're probably a major factor for the market going forward. The good news is we have moisture to make forage. That's probably the best news out of this, but the flooding can be an issue, and then the excessively wet conditions can be an issue to some extent. The drought issues is, we're watching that very carefully. We're seeing elevated beef cow slaughter numbers. That certainly indicates that we're probably moving some cows out of those drought areas. What we're not quite sure of yet and continuing to watch is whether or not that represents significant additional herd liquidation forced by the drought. Some of the elevated cow slaughter we're seeing right now could simply be sort of early culling, which is kind of what we would tell producers to do. If forage is short, you might make those decisions earlier in the year, and they would have happened anyway, but just at a different time of the year. On the other hand, if it persists in the coming weeks, and we continue to see this, then it probably indicates that we are, in fact, liquidating cows. That has some short-run implications, potentially, but probably more important are the longer-run implications in that we may just see an industry that's, a little bit smaller from a kind of a cyclical standpoint for 2022 and 2023.
Okay, let's move over to beef demand. You recently wrote a piece talking about how demand is looking to stay strong into the second half of 2021. What are the factors behind that?
Well, I think, in general, there's just an awful lot of, sort of pent-up demand on the part of consumers. I think it relates to the opening of the economy, getting the food service sector back online. Now, some of the increase we've seen in the first half of the year, I think, was sort of pipeline or inventory rebuilding in that food service sector. They had to get a lot of freezers and cold storage filled up back of house, and so that's probably mostly done. That cools it off, and we've seen the box beef price come down in the last few weeks, but that's from a higher level than we ever really expected to go up in the first place. So going forward, I still think we will see strong demand based on both food service and retail grocery demand continuing strong, and the exports play into that a bit as well, and those are looking very strong right now.
So the boxed beef that you mentioned, do you see what's happening there as more of just a correction then?
I really do. I think it reflects a temporary thing. I certainly don't think it represents a sort of an unraveling of demand at this point. I think it reflects, again, those pipeline stocks probably have gotten largely refilled at this point. And the other part of it is just the timing. A lot of that, the peak in boxed beef prices coincided with buying for 4th of July weekend. There's always a little bit of a earliness to that, and we got that done. We're past 4th of July now. We typically see seasonally beef demand back off just a little bit through the heat of the summer, and then we'll have another run a little bit as we get towards Labor Day. So all of this, I think, just sort of reflects the market kind of getting back to sort of seasonal patterns at this point.
And Derrell, we also have the cattle inventory report in a couple of weeks. Could you give us a preview as to what we could see, or maybe some things that we can be looking for in that report?
You bet. I don't have specific numbers at this point. I haven't made specific estimates, but in general, given everything we've seen with heifer slaughter, with beef cow slaughter, I'm pretty sure this mid-year report is going to reflect that we have continued to pull cattle numbers down, and that continues a trend that we've actually seen since the peak in 2019. I think we'll see that. One of the things that I will be watching for will be the feeder supply number that we calculate out of this report. And so it's not a direct number out of the report, but a calculation of the estimated feeder supply. And that's really kind of the key going forward to seeing these feedlot situation improve with numbers coming down in that. And so that feeder supply number to me will be important. And of course it will be also in this report our first look at the 2021 calf crop, which also should be a little bit smaller on a year-over-year basis.
What do you see as the big market movers for the second half of 2021?
I think the second half of the year is going to turn the corner and look significantly better than the first half of the year. We had lots of challenges that we kind of knew were there in the first half of the year, but feeder cattle markets, fed cattle markets, both should see some improvement. Calf markets, as we get towards through the third quarter, we'll see that improvement kick in. I'm not sure whether it's right away early in the third quarter or whether it's a little bit later, but certainly by the fourth quarter of the year, we're looking for year-over-year higher prices for really across the board for cattle markets. And I think, again, that's going to be a reflection of both an improving supply situation as well as continued strong demand, both domestically and internationally.